How does a state with no income tax at all end up on the list that I looked up actually for this show as the least tax friendly? It's interesting. Welcome to Make Your Money Matter. I'm your host, Brad Barrett. I'm also a managing director and partner here at One Capital Management. I'm here each and every week to educate and implore best practices when it comes to your finances, because after all, your money matters. Today on the show, I'm going to be talking about really an interesting topic that has come up, I think, over the past 2 years regarding moving out of state, in particular, California and New York, higher state income tax states. We're going to talk about that. Now, here at One Capital Management, our headquarters is in Westlake Village, California. It's just north of LA. Many of our clients are in California, but we also have many clients across this great, beautiful nation of ours. So as experienced advisors, we actually know quite a bit about some of the differences in cost of living, even down to certain states' taxes that are outside of California, as well as what I'll call the more expensive states in the union, New York, Hawaii, California. So one of the things many have seen in the news, I think for anyone watching or listening, is people moving out of California. It's a little bit more of an expensive state. I know, being born and raised here, it's not cheap to live here. And again, like I said, one of the more expensive states in the union, maybe other than New York or again, Hawaii. So it is interesting, I think, for us to have this conversation with our clients. And I thought it'd be a good idea to go through how some key states and how they operate, and then how those states tax the retirees, or really just the individuals that have moved to those states. But before we do, make sure to smash that subscribe button, hit the notification bell so you don't miss a single episode. All right, let's get into it. Obviously, I'm not going to cover all 50 on the show, otherwise we'd all be here for about 24 hours. So I'm going to select 9. Now, you might be like, Brad, why 9? Well, 9 I'm going to go talk about are the ones that we talked about quite frequently for different reasons, but the main one, the common denominator, is that these 9 do not have any state income tax. So again, pretty interesting for most of us here in California who pay high taxes basically everywhere around here. There's sales tax, luxury tax, state tax. I mean, literally everywhere. I digress. So of all the 50 states, we can talk about these 9 that I'm going to focus on that happen to have no state tax. Now, that's just one singular data point. So for these 9, for the next few minutes, I'm going to go through a couple other things to consider, at least financially or numerically, other than just no state income tax. I know everyone focuses on that, but I want to talk about some other items, some other taxes within those states, as well as some qualitative features, which I'll talk about in a second. So the 9 we're going to talk about are Alaska, Florida, Nevada, New Hampshire, South Dakota, Tennessee, Texas, Washington, and Wyoming. These are the 9 states that do not have a state income tax. So let's dissect these a little bit. Now, prior to the show, I was actually talking to my colleagues here at One Capital Management about how different planning, all the different planning we've done around moves for our clients. And really, again, outside of the numerical points that we mentioned, like no state income tax, but also taking a look at other taxes, things like property taxes, sales taxes, things like that. Now, it's important to note, there's also a very large qualitative, as I mentioned earlier, aspect that I want to make sure everyone knows about when considering or thinking about a move, and that's this. It won't show up on paper. It's not a rate of return like a reduction in taxes, nothing like that. But it is important, and that's a community. Okay, I in 18 years, 19 years of doing this, I've shared with a lot of clients moves for financial reasons, cash flow, investment-related discussions for financial reasons, but it all has to come and gets married with your qualitative features, the quality of life, and a community is really important. Whether it's family members, friends, relatives, churches, something that you have a tie into in a community when you're looking to move somewhere, I think is really important to the overall decision itself. And I think for the overall lifestyle and the sustainability of that move. And I've seen a lot of clients really only focus on not paying the state income tax anymore. And I understand that. That's important. I'm fully with you. But when they go there, they spend most of their savings of that no state income tax traveling back to the state they came from, or back to, see friends and family. So just keep that in mind as we're talking about these. And I just want to make sure of the 9 we're going to talk about, there's a couple other factors, again, to consider when it comes to moving to those states. All right, so let's get started. Let's start with the last frontier state, Alaska. First and foremost, no state income tax, like we mentioned. But that doesn't mean the last frontier state is the best state to retire to. It isn't necessarily a tax haven, I would say, and here's why. There are, relatively high property taxes, which has a lot to do with a mixed tax structure for many people. Their combined state and local sales tax is also 1.76%. The median property tax is right around 1.82%. There's also a 1.2% property value. So not low, not high necessarily, but it's decently high. There is, however, one unique perk if you live in Alaska. The state sends all permanent residents who have lived there for at least 1 year an annual dividend check from its oil. Wouldn't that be nice? It's actually from the oil, the wealth savings account. Pretty interesting. Imagine that for here in California. For anyone watching or listening here in California, a state that actually pays us. I digress. But the payout this last year was around $3,000. Now, 2 years ago, it was like $992. So it goes up. I mean, this goes a long way, I think, in balancing out any bad tax news. So again, something to consider. Next up is Florida. Now, everyone's heard a lot about Florida, and honestly, until a pandemic, we always knew, and I think most people would know, Florida as the sunshine state, but the quintessential retirement state is also what has been known as. It is a very tax-friendly state, has no state income tax, as we mentioned. The average combined state and local sales tax is 7%. Now, real quickly, compare that to Alaska at 1.76. You can see it's quite a little bit higher. Now, for us here in California, pretty relative to where we're at, the median property tax rate there is about $830 per 100,000, so a little under 1%, which is also good. And there's no estate tax or inheritance tax in Florida. So property taxes are reasonable in Florida, and anyone ages 65 and older who meet certain income and property value in terms of length of ownership restrictions can also receive an extra homestead exemption. So Florida, no state income tax, relatively high sales tax rate. And for many of us on the West Coast, it's on the East Coast. So a lot of times I haven't seen it, you really want to have that community again. So those friends or those relatives or community, because of the distance, Florida seems a little bit far. I mean, you're a 6-hour flight, 3-hour time zone difference for many of us, for your family and friends, here on the West Coast. So something to consider. Again, very, opportunistic in terms of financial or numerical data, but something to consider when you look at Florida. All right, next up, Nevada. Now, just like the other 9, we're going to go through, as I mentioned, no state income tax. This one's interesting because it's very close to us here on the West Coast. For those watching or listening on the West Coast, it's an interesting one, right? A lot of conversations arise around Nevada. It's mostly tax friendly. Again, no state income tax range, but to give some data points like I just did for Florida and Alaska, the average combined state and local sales tax rate is 8.23%, relatively high. But the property tax rate is about 0.5%. So pretty good when the Silver State offers retirees kind of a jackpot for savings, but for anyone else too, if you think about it. The property taxes are below the national average, but that's as good as the state offers. No property tax breaks for seniors. So Nevada being close in proximity to the West Coast, no state income tax, very low property tax, pretty good to take a look at. So again, back to, families, friends, communities, really important to look at when you look at a state like Nevada, being close, bordering the state of California here for those clients or those, listeners or viewers watching here. An interesting state to look at. Next up, I'll go through is New Hampshire. Live free or die. In college, I had about 3 of my roommates from New Hampshire. Shout out to them. It's interesting, right? Because it's like, I went to, my undergrad was in Arizona, and a lot of people were attracted from the East Coast, probably for the weather. So New Hampshire, kind of like Alaska, weather is a factor as well, just to consider. Now, residents of the Granite State, New Hampshire, pay no taxes on Social Security benefits, pensions, or distributions from their retirement plans because, again, no general income tax for the state, just like the others we've mentioned. However, New Hampshire is interesting because it imposes a 5% tax on dividends and interest. In fact, the first $2,400 or $4,800 for joint filers is exempt, but there's also a $1,200 personal exemption available for residents 65 and older. You can talk with your tax preparer about that. There is no sales tax in New Hampshire. That's a unique one. So you can shop to your heart's content without having to pay any tax, and you'd likely run into a lot of out-of-state shoppers. In fact, I have a lot of clients, again, in the Massachusetts, New England, Boston area. They actually shop in New Hampshire for different reasons. Now, here's the hitch. The median property tax rate in New Hampshire is the 4th highest in the entire United States. It's around 2%. That's high for even us here in California or New York. But some property tax relief is available for seniors. So again, if you're looking to move to the live free or die state. The little New England area, something to consider. Yes, it's no state income tax. It doesn't have sales tax, but property taxes are pretty high. They're actually kind of huge. So next up I'm going to talk about is South Dakota. We're going to go from west to east. We're going all over the map here, okay? The Mount Rushmore state, it offers both good tax news and I'll call it some not so good or bad tax news, I would say. First, the good news, as we've been talking about, again, no state income tax. Social Security benefits or other forms of retirement income, or really any income, is not taxed from a state level in South Dakota. The bad news, though, if you take a look at the state's property tax rates, they're on the high side as well, kind of like New Hampshire. They're right around 1.2, 1.3%, which is relative to what we pay here in California. So it's kind of a split on South Dakota. But another one that's a no state income tax and something to go through as we talk about. So again, South Dakota, that's where you want to reside. No state income tax, relatively high property taxes, nowhere near New Hampshire's, but something to consider. Tennessee, our next state. Now, most recently, I've had actually, of all the states, interestingly enough, 3 different clients moved to Tennessee, which I think is interesting because, again, most of the clients I've ever talked to around moving are Nevada, Arizona, Idaho. Again, not all those states have no state income taxes, but on the West Coast here, maybe Washington or Oregon, things like that, because it's close in proximity. But this one's interesting, and I kind of get it. I mean, it's a beautiful state. Again, no state income tax, and it's mostly tax friendly. There are some downsides, though, as I want to go through today. The combined state and local tax rate is right around 9.5%, which is pretty rich. That's pretty high in comparison. But the property taxes are low. The property taxes are about half of what we pay here in California. They're right around 0.6%, almost half again, or so on property tax value. So it's interesting when you look at it from a sales tax perspective, but I think most people are going there for the state offers in terms of lifestyle. It also offers a very family-oriented state. I think that's what Tennessee's drawn. That's what my clients saw. And if you've ever been there before, it's an amazing state. So, all right, Texas. How does a state with no income tax at all end up on the list that I looked up actually for this show as the least tax friendly? It's interesting. You wouldn't think that because everyone talks about no state income tax and things like that. Now remember, I'm just talking numerically and financially, not quality of life and things like that, because I think what Texas offers is amazing. And I was reading through a Kiplinger article around this because it showed up as the least one of the least tax-friendly states. And it starts by having the 7th highest median property tax rate in the country. The Lone Star State does offer some breaks from that property tax burden with an additional homestead exemption, kind of like Florida. There's valuation freezes and programs and different things like that you can look at. But the benefits there may not be enough to make Texas a truly tax-friendly state, specifically for retirees. And not only the property tax rates are a little high, the sales tax rate is pretty high as well. The average combined state and local tax in Texas is 8.19%, which is the 14th highest combined rate in the US. This is one of the examples I bring up when it comes to moving out of California, because moving out of a state, moving to a state as no income state tax is important, but there's also other factors to consider here. But essentially, when you look at it, 14th highest sales tax rate, 4th highest property tax rate. So you got to look at where you're spending your money and where you're spending your time when it comes to Texas. If you're looking for a big property and home and want to spend time there, property taxes might be important. And if you're looking to shop in Texas, because as we all know, everything's big in Texas, getting to another state, not that hard. So you can't just dip over to Oklahoma unless you're on the northern part there. So it's important to kind of look at where you're spending your money. All right, Washington. This one's also a little bit mixed because, again, the Evergreen State, it's one of the 9 states with no broad-based personal income tax, as we mentioned. However, it's interesting to note that in the beginning of this year, Washington imposed a 7% tax on the sale or exchange of certain long-term capital assets if the process exceeded $250,000 annually. However, the constitutionality of the Washington capital gains tax has been challenged in court. But interesting to note, so just take a look at it. You can do your research on it. So depending on when you watch this episode or when you're listening, you may want to research where that all stands. Now, sales taxes in Washington are extremely high, 9.29%. That's the 4th highest in the nation. Property taxes in Washington are a little more reasonable. There right now is just under 1% or so it's very close to the national average for that matter. And it offers actually 2 property tax relief programs that's only for seniors. So again, age also comes into play when it comes to states, and I want to cover those when you're moving and just solely focusing on no state income tax without looking at the other types of taxes and the other things around the financial move. All right, last but definitely not least on the list is the equality state, Wyoming. Now, most people, this doesn't come up on people's radars, but it's interesting to talk about. And I think it's a great state to go through. It's a very tax-friendly state to all residents. I mean, of all the numbers I mentioned on the previous 8 no state income tax states, this actually is one of the most tax-friendly. No state income tax. The combined state and local sales tax rate is 5.3%, very low. The median property tax rate is right about 0.5%. So when you add these things up, you start looking at, again, the sales tax being the 8th lowest average combined in the US, and the low property taxes, which is tied for the 10th lowest in the US. And not to mention, it's wide open over there. Now, again, family and friends and communities involved with any kind of move, but Wyoming, although it's not talked about too much, is one of the states that has, again, no state income tax, but all of the other 2 main ones that I focus on for this episode, for this show around sales tax and property tax, Wyoming is also very relatively low. So I hope today was at least a good eye-opener in terms of what other things to consider from a numerical standpoint when looking at moving, maybe moving to, again, one of the 9 states in the US that I mentioned today that don't have any state income tax, because everyone likes to focus, again, on that specific tax rate. But again, sales taxes, property taxes, estate tax, inheritance tax, there's a lot of other things to consider when it comes to financial data or your financial plan around a move in particular, but a move solely to a no income state tax state just because of that reason. There's also the cost of living. Look, the cost of living is less in most states other than, say, California, New York, but it's all relative. So when you look at those kinds of things, it all adds up. The one thing that I mentioned a few times today, and it won't show up on paper again, there's no numerical data that can show up on this, but there's also a lifestyle from wherever you're moving. You might save on cash flow, save on cost of living, save on taxes, but if your friends and family and community aren't around, I found in financial plans I've run for nearly 2 decades now, you're spending that savings traveling back to see them. So it's interesting, you want to kind of look at all the data points when you're looking at it. I think also this episode is very interesting timing. We're still on the heels of the pandemic, if you will, coming out of it. And it's like, for those that are working remote, this is very timely. I mentioned the same topic 2 years ago on one of our other podcasts, the Make Your Money Matter podcast, because everyone was working remote. People started thinking, hey, I can go work somewhere else. I don't have to be right where my employer is. Now, a lot of that's changing a little bit. As we've seen, some employers are asking people to come back, and we're going to see how all that shakes out. But my hope for today was that, you realize that, again, from a numerical standpoint, it's one thing, but it's also about family and friends and community, because all that has to go into, and I wanted to tie that in with any kind of move. And again, the lifestyle, we have in the state you're in or what you become comfortable with is something to consider. So you want to look at all the aspects when you're going through it, because there's going to be issues in every state for that matter. I mean, let's be honest. But if you're looking at those kinds of things and going through it, I at least wanted to make sure you had some of the data points to go off of, because I know I threw a lot of data points at you today. Now, some of those might be outdated already, so you want to look into those because every year those things change a little bit. But at least for the most part for today on the Make Your Money Matter show, I want to talk about the 9 in particular, no state income tax states, and then the relative other important taxes that we pay, but sometimes we don't realize we're paying them, and how those all shake out. Okay, it's time to answer your questions. If you have a question or a topic you'd like me to address, you can leave a comment or question in the comment section, or if it's something more one-on-one you want to go through with me, just go to the About page on this channel and send us an email. We always keep the questions I read here anonymous, so you never have to worry about your name being shared, but we would love to hear from you. So the question that came in this week, I actually think is a good one. It's a little more generic and broad strokes, but I want to answer it as best I can. Is there a simple tax strategy that most people do not know about? Number one, I want to share of the entire episode, in fact, today. We as One Capital Management, me in particular, we're not a tax advisor, right? So you definitely want to seek professional tax advice on anything discussed. But being a financial advisor for nearly 2 decades, what I say to clients is my job is to know a lot about taxes. I may not file the 1040, the tax return for you guys, but the question's a good one. I think there's a couple things I'd answer that. One would be this: we have to remember that we are in a marginal tax bracket. Now, what does that mean? When someone says, oh, taxes are going up, you got to remember that there's thresholds to the income. And by marginal, that means there's a certain threshold for each income. So let me give you an example. And this is broad strokes here, so don't go do tax planning on this. But if you're making $100,000 a year, right? The first $20,000 will be taxed at 10%, and the next $20,000 to $80,000 will be taxed at 12%, and then the $80,000 above that's at 22%. So if you combine those two, and you know this, if you look at your tax return, you see that number that says effective tax rate. That's what that is, basically, that and federal income taxes, and state income taxes. So those get put together. So I know it's a little bit off topic, but the question of, is there a tax strategy? Number one, know that it's marginal. So talk with your CPA, talk to your tax preparer to manage the margin bracket. So make sure the biggest jump in our tax code right now is from the 12% to the 22%. And that's right around $80,000 married, filing jointly. Again, broad strokes in that number. But that's a really good number to know, because if you can keep your income or your distributions from, let's say, IRAs, 401ks below that number, maybe using Roth, that's where Roth comes in to weather that, is a really good strategy to use. The other one I think I'll mention is kind of, again, a broad stroke, is itemized deductions versus standard deductions. When you look at those right now, the way the tax code states, it's right around $20,000 to $24,000 for a standard deduction for a married filing jointly. You really want to go to itemized if your itemizations go up. Things that are itemized are tithing for churches, Schedule A deductions like mortgage interest, things like that. So sometimes we get the question like, where do you want to go, the standard deduction or the itemization? So those are really two like first base strategies. When you kind of rounding the bases here, you kind of want to look at those two first, talk with your CPA. Nothing specific there. And all I mentioned today on the show with regards to those property taxes, sales taxes, and overall state income taxes, those fluctuate as well. There's also, every state has their own unique taxes, right? Like here in California, for those that make over $1 million, the state actually charges you 1% for nothing, in my opinion, but for nothing, right? So just $10,000. So there's always these little nuances with little states. So it's always good to make sure that if you are in a certain state you're residing, you work with a CPA who understands that state. That's really important because there's little nuances for sure. So again, if you have a question or comment you'd like me to read here, you can leave it in the comment section, or again, email us in the About page on our channel. Before we go today, if you found anything helpful today and want to learn more, visit our website at onecapital.com, where you can scan the QR code on the screen with your smartphone. It'll get you right there. You can also call or text us. We want to help. Listen, there's no pressure here. We don't treat people like a number at One Capital. In fact, we value relationships. It's the lifeblood of what we do. So click, call, or text us today. If you're not following us on social media, you should be. You can follow us at Make Your Money Matter. We're sharing great information on all of our social media platforms. As I often say, if you enjoy the show, share with someone you like. And if you don't like the show, I guess, share with someone you don't like. But until next time, always remember, make your money matter.